The financial world was turned upside down after the surprising surge in the stock price of the video game retailer GameStop, which went from roughly $20 a share to an all-time high of $469 on January 28th. Now it fell exponentially once again. The rise was driven by a group of online retail investors who post on the popular Reddit message board Wall Street Bets. The rapid surge impacted numerous hedge funds who had taken out short positions on the stock to lose billions. With us to talk about GameStop is Karlos. Catherine is a graduate of the Schulich School of Business, where she obtained a bachelor in accounting and finance and a master's of accounting. She successfully passed her CPA exams in 2019 and is currently working in finance for an e-commerce startup. She is also a co-host on the Miss Independent podcast and has a channel on YouTube where she talks about investing and finance, among other things. Catherine, welcome to the show.
Γεια σου Πανιώτη, τι κάνεις?
Καλά είμαι. Ευχαριστώ που ήρθες. It's a pleasure to have you.
Thank you, it's a pleasure to be here.
Full disclosure, Catherine and I know each other for a few years now, and I'm really happy to have you on the show.
Thank you, I'm very happy to be here and to speak with all of you today.
So, let's talk finance. How was a group of online retail investors able to upset billion-dollar hedge fund managers almost overnight?
Yeah, so let's get into it. So before I get into the story, let's get into a few investing terms that some people may not know. So normally when people invest in a stock, they invest in a stock with the expectation that the stock is going to go up in value and that they're going to make a profit in the future. So this is called going long on a stock, and it's what most retail investors do. Now, as you mentioned before, similarly, there's something called going short on a stock. And that is when people bet against the company. And this could be for a few reasons. Either they think the company is overvalued, or they think some economic event is going to trigger the stock price to go lower in the future. So let's give an example with apples for shorting a stock. So let's say I think the price of apples is going to go down in the future. It's $1 right now. So I'm going to go to an apple retailer, ask to borrow one apple for $1. I'm going to then sell it to a third party, make that $1, and then when the price goes down in the future, and let's say now it's 50 cents, I'm going to buy that apple back, make my 50-cent profit, and give that apple back to that retailer who I borrowed it from. So you could now use this example with stocks. So essentially what you do is you borrow a stock from a broker or another investor, you sell that stock on the open market for a higher price, you buy it back for a lower price, and then you return the stock. So that's what happened. So a bunch of users on a Reddit forum, as you mentioned, called Wall Street Bets, realized that this stock, GameStop, ticker symbol GME, was heavily shorted by hedge fund billionaires and Wall Street big shots. So they came together and they decided to purchase shares of this company so they could all make money and also to stick it to these big guys. And what happens if we take basic economic principles of supply and demand, when people start to purchase shares of a company, there's less supply on the market for other people to purchase these shares. So the stock price shoots up. So that that's what ended up happening. A lot of people started purchasing these shares and the stock price kept going up and up and up, and they weren't selling. And then Tesla god Elon Musk got involved, and he decided to tweet the link to the Reddit forum Wall Street Bets, as well as the GameStop ticker symbol GME and a rocket ship emoji, kind of symbolizing that this stock is going to take off.
Yes.
So understandably, a lot more people around the world started to buy and buy and buy these shares, and the stock price started skyrocketing, and everyone was making money. all these retail investors like you and me were making tons of money. To put into context for you, Peter, I know people who made over 100 grand on this stock.
How much did
It
they
was
invest initially to make that money?
I think they bought it around $40. I'm not sure how much they invested initially, to be honest with you. I could do the math right now on a calculator, but they they initially invested quite a bit, like maybe their savings.
Okay.
But like I said, a lot of people were making a lot of money. And since a lot of people like you and me who were going long on the stock were making money, the people who shorted the stock, these huge hedge fund investors and Wall Street big shots, were losing billions of dollars on this. So what was really interesting is the next day, when everyone expected the stock price to continue to shoot up, because now word of mouth, everyone's hearing about GameStop, GameStop. Elon tweeted it. Now the word's getting out. Everyone expected the stock price to shoot up, but what ended up happening is now these brokerages and institutions started to get involved. So brokerages such as Robinhood and TD Ameritrade were restricting people from continuing to buy the stock.
Can you do that?
And
Is that
only-
even like fair or legal?
See, I don't think so. And this is what everyone had a problem with. So what ended up happening is, because they were only allowing people to sell, again, if we talk about supply and demand, if people only sell and no one buys, there's more supply on the market, less demand, and the stock price shoots down. So because people were afraid and this caused a lot of panic, people understandably started to sell their shares because they didn't want to lose all their savings that they invested into this. So then what the banks did essentially was they went in to save these hedge funds and to save these Wall Street billionaires for losing so much money that they were shorting, because they were shorting the stock. So they tried to drive down the price of the stock enough so these people who, borrowed the share could buy back the share at a lower price, cut their losses, and return the share back to the investor brokerage broker that they borrowed the share from.
So can you help
So
me
this
understand?
angered so many people.
So help me
Sorry, go
understand
ahead.
something. So is GameStop really worth billions of dollars that the market values it? Because this is what I'm trying to wrap my head around.
Absolutely not, Peter. The financials were poor. They were struggling this share to get the stock. To give you some context, they shut down numerous locations. Their stock price was trading about $4 last year. It was nowhere near this price. But when enough people get together and decide to buy a stock and take away the shares off the market, it will drive up the stock price. And that's what happened.
So you kind of beat me to the punch, because my next question was, are we going to see online retail investors on Wall Street Bets or other social media platforms manipulate stock prices in the future? Is this going to be the new normal?
So I don't believe that retail investors manipulated the stock price. From my perspective, I think the hedge fund billionaires and the Wall Street big shots manipulated this price, because what they did was they went, had their dinners, got together behind closed doors, and they all formed together and said, we're going to short this stock. So they got together initially and decided to drive down the stock price of this stock, of GameStop. And I think that the war isn't over between hedge fund billionaires and retail investors such as ourselves. I think we're going to continue to see this with other stocks that are heavily shorted. But I think there's manipulation on so many ends, including these brokerages who, told people what they could and could not do with their hard-earned money, told people that they can't buy certain things, that they can only sell. I think this upset a lot of people on Wall Street. And I think that going forward, Wall Street is going to come up with some way to prevent this from happening again and prevent us retail investors from kind of getting these hedge funds in trouble per se.
I want to talk about that a little later, but explain to me, how does it differ that a group of billionaire hedge fund managers can get together, as you said, behind closed doors and decide to short a stock, and a group of individuals who are on social media get together and decide to do something along the same lines or to increase the price of a stock? How are these two situations different? And obviously understand that billionaires have more pull and more influence, but ultimately, don't we have two separate groups of individuals who are, quote unquote, manipulating?
Doing the same thing essentially, yes. The thing is, with these retail investors, and by doing it through social media such as Reddit or Facebook chats, at least it's out in the open for the public to see. Whereas these billionaires and these hedge funds are doing it behind closed doors. So I think that's the difference there. I think both parties are essentially doing the same thing, but in different directions. But I think it's just more about transparency.
I see. So we're back and we're speaking with Karlos about the GameStop situation. And before our break, I asked her if something along the same lines can take place here in Canada, and if we have groups of hedge fund managers or even retail investors online who are doing something like this or can do something like this. Catherine?
Yeah, absolutely. I think this could happen around the world, anywhere. To give you some context, I woke up to my bank, my brokerage app from my bank telling me that they were going to restrict the buys of this stock. So this could happen anywhere around the world on any exchange, because the institutions and these brokerages where you put your money in essentially control what you can and cannot do with your money. So it is a very scary situation and a scary thing to think about.
So where do we go from here? Because we've heard everybody talk about regulating and deregulating people who support one or the other side. They've made arguments for, again, regulating better how Wall Street functions so they don't have something like this in the future. Others argue that in order to protect retail investors, they have to deregulate even more, which seems kind of like an oxymoron. So where do we go from here? What's the next step you think that the people in charge are going to take?
Yeah, so I have no clue, but my best bet would be there's going to be some sort of regulations to continue to prevent people from purchasing certain stocks that go against these hedge funds. In terms of the SEC, the Security Exchange Commission, I have no clue what they are going to propose, but I'm interested and very curious to find out. But I do think there will be some regulations put in place to prevent retail investors like you and I from going against these billionaire hedge funds and Wall Street big shots in the future.
Do you think this has harmed, if you will, the image of the stock market? Because it makes it seem like it's one huge casino.
The stock market is a huge casino. Every investment is a gamble. The thing with the stock market is before this time, you could make pretty educated guesses onto what stocks are going to go up in value based on doing, financial data research and looking at fundamentals. Now it's all with these meme stocks, these joke stocks that people are going in on because of social media and driving up the stock price. So it's just crazy, Peter.
So we're slowly wrapping up. Is there anything you'd like to add about this whole situation?
Yeah, I think that people are going to continue to use social media such as Reddit, Facebook, Twitter, looking at Elon Musk's tweets to continue to communicate with other people and educate themselves and others and come up with investment strategies to take on Wall Street. My last and final point is I don't think it's right what these brokerages and institutions are doing, preventing people from purchasing what they want to purchase with their hard-earned money, and hopefully this changes in the future.
Karlos, thank you so much.
Thank you, Peter.
Make sure...
guys, ευχαριστούμε.
Και εμείς. Make sure to tune into MISP Independent Podcast on iTunes, Spotify, and everywhere else you get your podcast, and visit her YouTube channel, Katie Karlos Finance Club.